first slide. So as we know, for the first half, actually for the Asia stocks actually didn't perform that well. I think we registered for the first half, and we say for the Asia equities actually lagged behind. So we have averaged like 10% of the rally for the global stocks, but for Asia equities, we only have like rallied for like only 3 to 5%. So we think that there is a strong catalyst for the second half, including like stepped up the vaccinations and strong earnings, and also attractive valuation. Currently for Asia stocks, for the valuation is only 30% of the developed countries. So we think that for the second half, for the lagged countries like China and Japan will play a very important role for your portfolio growth. The next PPT. So for China's GDP growth, we have very strong first quarter. And the GDP growth registered at 18.3%. So for the second quarter, we expect the slowing down and to the like around 8%, but still very strong because for the first quarter, it's mainly because of the base effect. For the second half, and we expect the 5.5 to 6%. So for the whole year, I guess China still will be the champion of growth. We forecast is 8.5%. So for the policy side, we know for the US, it's already start think about tapering. So for China's policy, yes, it's a normalization. However, at the same time, we also see the policy as a try to more pro-growth. But of course, they still keep tightening on the real estate side. But overall speaking, we think the China's policy still try to provide reasonably sufficient liquidity in the market. For the fiscal side, we still have very strong support from the government. So this year, for the government bond issuance will up to CNY 4.45%, 4.45 trillion. So I think it's a very large number, especially to support the infrastructure. As you might know, for China's infrastructure last year, only 1 year, we have the 2.3 trillion US dollar. So that's actually planned for the US for the coming 8 years. So China is a champion of the for the infrastructure. And also for the vaccination side, currently, I think the pace is very fast. So currently, we already have 1 trillion total dose injected. And that's about 40% of the population or 50% of the adult population, comparing with the US 60% of the population. So I think the China and the US and the UK, Israel are probably the top 4 countries to have the most vaccinated. So that's also allow for the continuous recovery for China's economy. The next PPT. So for China, not only we have the very positive growth and also for the equity upside for this year, and we also expect actually for the longer term. So I think that especially for the 2025, I think the China have the 14th five-year plan already outlined for China's like for the future. So the China now, the government plans to targets to double the GDP by 2035. So that means we will have CAGR growth of the 4.7% for the coming 15 years, comparing with the potential growth of the US at around 2 to 2.5%. So that means that China's GDP is likely to exceed the US by 2030. If the CNY continue to appreciate, the pace could be even faster. At the same time, I think that for China, I think very importantly for the green economy is also a new agenda. So the China is already promised to the carbon neutralization by the 2060, and also for the carbon emission peak by 2030. And also, I think that for the energy use per GDP is expected to down by over 13.5%, like for the coming 5 years. So overall speaking, I think we are positive for the medium and long term of the China's growth. The next slide. So of course, I think besides for China's like a very rapid growth, and also this year we expect for the China, the corporate earnings is up to 17%. The next year is also mid-teens. So I think that no matter it's for the macro data and also for the micro fundamentals all support the equities continues to rally for the second half. But I think that there's still some concern of the investors about Sino-US relationship. So in our view, yes, I think the pressure remains, and it could escalate from time to time, probably due to the fundamental disagreement. But at the same time, we also see some positive progress between the China and the US. So recently, we already see for the China and the US already resumed the first trade talk on the Biden's administration in May. I think with quite candid and frank tone. And also, I think we also recall the China and the US also have the high-level climate change meeting in Shanghai in April, and already both sides agreed very concrete targets. But of course, and recently we also see the Biden also pushed the rally as allies at G7 summit in June against China on various issues, including human rights, including for the Xinjiang Hong Kong issue and also phase 2 investigation of the COVID-19. However, we think the language of the G7 communique turned out to be softer than expected. So it reflects a disagreement on how to approach China among European nations, and also suggests that the US is unable to impose its most extreme views as a G7's uniform outlook. I think overall, we think that there is a tension, but overall, we also see there's also a positive side. So we think this new normal of strong erratic results, the extreme actions should help to keep volatility in check. The next page. So how to invest in China? So we have the 3 key actions, 3 key ideas. So first, we think that we already mentioned that for the China equities, in our view, are very positive, very attractive. So this year, we expect 17% of the corporate earnings and also mid-teens for the next year. So we expect more policy measures on 4 prioritized areas, including dual circulation strategy, tax self-sufficiency, urbanization 2.0, and green economy. So I think that for investors could focus on 3 fields. The first is broad consumption. So that's including consumer, e-commerce, healthcare, smart infrastructure, LOT, financial. And also second is high tech, including the fintech, AI, 5G, big data. And finally, green economy, including green tech, renewables, EV chains. And China's high yield is also very attractive. And we know for the China's high yield and the 10-year CGB currently is around 3.1% with the potential of the RMB appreciation. So I think that's very attractive to our foreign investors. Finally, CNY strength, I think will make the CNY assets much more attractive. Thanks, I will stop here.
Excellent. Thanks, Yupon. So we'll transfer over to you, Greg Schuler, if you could expound on either what Dr. Wu just mentioned or your views as an allocator, a global allocator.
Thanks, Mark. So I'll springboard off of everything that Dr. Hu gave us, and I think she gave a great summary of what's the natural attraction of Asia. It's one of growth. And the allocator view is we looked at all the asset classes. When I was at Pitt, we were very focused on all the asset classes and where do we think our time was the most effectively spent. And we had some unsuccessful attempts to try to capitalize on areas such as real estate in Asia. And after some time there, we felt that our capital just wasn't as efficiently deployed to capitalize on growth as in areas of equity. And areas of equity, we spent a lot of time on both public markets and private markets. And in public markets, we were very focused on, after doing a lot of research, we concluded that we wanted to do Pan-Asian players. So people that had the ability to toggle between China and Southeast Asia. And the reason why we felt that that was important is as you think about China, the decision of what class of China that you're going to pursue becomes very important from a return perspective. And we wanted the managers to have the ability to toggle across A, H, and ADR. And there's an interesting dichotomy that we're all familiar with, that as Class A continues to be bid up in China, H and ADRs became much more attractive on a relative basis. And we wanted our managers to have that ability to move even within China across classes, and then within Southeast Asia itself, to be able to make the relative decision of Southeast Asia versus China. And even in places like Japan, which I know we're probably not going to spend a lot of time on today, there was a growing opportunity to play activist, let's call it passive activism, in places like Japan to capitalize on the cultural evolution that's going on in Japan. So our conclusion was, let's spend all of our time on the equity side. And then for public markets, it was almost entirely Pan-Asia or passive activism in Japan. And we had a good amount of success with people that had the ability to move their net and gross up and down opportunistically to capitalize on that space. On the private side, we spent most of our time on growth equity and venture capital, and we bifurcated Asia into 3 regions. We bifurcated it into India, Southeast Asia, and China, and we felt it was important to bifurcate the region into those 3 segments because they're all very different. But we thought they all had the same type of tailwind that Dr. Hu referenced. Growth is obviously tremendous, and private markets were able to capitalize on that growth tailwind. So in India, we were very focused on venture capital, early and late stage, and growth equity that we felt were able to capitalize on the dysfunctional nature of India's distribution infrastructure. And so we were able to find a number of opportunities in India that were effective at consolidating the distribution infrastructure of India to capitalize on the growing middle class in India. For Southeast Asia, we felt that while the preponderance of opportunities in Southeast Asia were in the consumer class, we were becoming aware that enterprise was becoming increasingly attractive in Southeast Asia. And we invited Paul today to talk about at Wavemaker, the enterprise opportunities that are in Southeast Asia, but also what made Singapore very attractive from our perspective. And Paul will talk about this, were the programs that were offered by the government of Singapore as catalysts to drive venture investing out of Singapore. So we also felt that that was a very attractive characteristic on the equity side out of Singapore. And then in China, we were focused on the growing evolution of software. So while traditionally software hasn't been a very attractive strategy in China, because as we all know, there is an unwillingness in China to pay for software. We do believe there's a growing evolution to capitalize on SaaS in China. Dr. Hu talked about what we thought was a very important trend, was China's commitment that they would hit peak GHG emissions in 2030, and then they would be net neutral by 2060. For a country of this size, which is the largest emitter of GHG by a large margin around the world, we felt that this was an incredible decision by China to hit the peak by 2030. And we became very focused on opportunities around logistics and transportation that would capitalize on this goal by China top down to reduce emissions. And so we were very focused on those areas of opportunity, but also healthcare became another interesting area of opportunity that we were focused on because of China's growing focus on distributed healthcare across the country, trying to improve and standardize healthcare coverage across the country. And so we've also felt healthcare was another great area of opportunity outside of the traditional areas of consumer venture capital that we all become very familiar with. For Southeast Asia, I think it's important to note, I think the concern, and this goes for India too, we were always worried about, are there enough unicorns to feed the returns in those two regions? And our conclusion is that we could still hit our return targets because valuations, particularly in Southeast Asia, were much lower at the earlier stages, which meant we didn't need the same type of exit valuations that we needed in places like China and India, where the valuations were much more inflated. And so as we, to summarize, the way that we thought about Asia as a region is that we were very focused on the equity side of the equation. We didn't have a lot of success in credit or real estate to hit our return targets. And so we became very focused on growth equity, and venture capital is our return driver. And we approached each region very differently in the way that we tried to address our return targets. Throw it back to you, Mark.
Okay, great. Thanks, both Dr. Hu and Greg, for sharing that. We have time for Q&A as they sort of set the stage before we turn over to Rob Garrett and the VC perspectives. If you're new to our events, we are interactive. This is not a webinar. Now it's like law school. I might have to start calling on people.
Mark, you're going to hear from me, but I'm happy to chime in. Some really interesting insights from Greg and Dr. Hu. Thank you. I mean, who's going to win the battle for supremacy, US versus China, in terms of the race to be the climate leader in the world, do you think?
I think that both US and China have the ambition and to I think to fight try to be like to achieve the carbon neutral. So I will not call it a rival, but I will call it more like a cooperation, between two nations. So I think if these two nations can work on this topic with a common interest, I think that's very positive to a global economy and the market. Yeah, and also I think that also proves I think for China and the US actually have some common fields and they can work together, including the climate changes and also trade topics. I think so not only the tension, and also we have this kind of the mutual respect and cooperation. Thanks.
Yeah, Rob, I'll jump in there for a minute on that. As I think what's interesting is this is one of those rare times where I think there isn't going to be, let's call it a definitive winner, that technology is going to drive this. I think each country is going to have its own customized solution on how they achieve their goals. And I think great examples are in Europe, where you look at places like France that is heavily biased towards nuclear generation, even though they are winding that down. Each country, in the way that they address their power generation, is how they're going to get their targets down. But it is going to be customized by each country. I think they're going to hit their own solutions. And this is much like, I think healthcare in China is got unique solutions that are going to be very different from the US. We can capitalize on those trends in each one of these countries as we invest. And I think China, interestingly, is so large. There's so many interesting veins that you can penetrate on energy, healthcare, transportation. It's a very vibrant place to capitalize on these opportunities.
Other questions?
Mark, I have one. It's Sherry for EFAM.
Sure.
What is your view on the digitization of yuan, and what is your perspective on crypto in China?
That's interesting. So the question, I think for crypto, so I think there's two stories. So one side is for the digital currency. So that's actually created by the PBOC, by the Central Bank of China. So that part, I think that China has the initial advantage. So I think starting from the October in 2019, the China has actually progressed very well. And currently the China already gave about 100 million, over 100 million of the CNY digital currency for free to apply in different scenarios. And currently we have 5 experimental cities. And also we have involved 6 banks, we call the 6 wallets, and also tried in the different scenarios, even online and offline for the merchants and hospitals and all kinds of scenarios. So it's quite interesting. So for the cryptocurrency, I think what China tried to do is not against cryptocurrency, but try to tackle the speculation associated with cryptocurrency. So recall that in 2019, so what China do is try to shut down for this kind of exchange platforms of the cryptocurrency in China, because it's become a very severe speculation. So I think that China tried to shut down. For the recent campaign, I think China is mainly to target for the carbon emission related issue, because as we know, the creation of the cryptocurrency costs a lot of energy. So especially in China's western provinces, including Yunnan, Guizhou, for this hydropower, for Inner Mongolia, and it's for cheap for the also for the coal power. So I think the China tried to cut this kind of carbon emission and try to achieve its for the carbon neutrality target. So I think with a different purpose and to try to more regulate the cryptocurrency in China. But that's of course the consequence is to lead is at least one of the driver to push down the price of the cryptocurrency.
Thank you.
Other questions? Maybe one more.
I've one about cryptocurrency in China. So I've heard that many have compared Bitcoin especially to store of value like gold. So looked a little bit into when China actually allowed personal ownership of gold. That was actually all the way in 2002. So but gold has been around for thousands of years. It's just wonder whether according to Dr. Hu, your knowledge, is Bitcoin in China gonna be a similar fate to gold? So is it gonna be eventually they will still allow people to, allow exchanges just like how people can purchase gold from the Shanghai centralized regulated gold exchange? Would that be similar?
Yes, in my view, as I said, the Chinese government never stop individuals to hold cryptocurrency. What they try to tackle is for the speculation as well as for this kind of the energy consuming crypto creation. So I think for the cryptocurrency, to some extent in China, there's many platforms in the back to the 2018. So I think that it's also creates a lot of not only speculation, but also this kind of the fake trading. So I think try to attract many the individual investors without full knowledge to go inside. So I think that's what the Chinese government tried to stop. So the similar as you mentioned, for gold, of course, the good, I think in China currently also have many products associated with gold. So not only for this kind of physical good, and also for this kind of the gold coin, and also for the paper good. I think they're all very popular in China. So I think gold is not only for this kind of the a value keeping purpose. It's not only for the jewelry purpose. It's also a good investment for many of the Chinese investors. So yeah, for cryptocurrency, I think to some extent, of course, the value is volatile. It's very volatile. But I think many of the Chinese now have strong interest to hold at least some of the assets to put in the cryptocurrency in case of its potential growth, but of course should not be like a big part of its asset allocation. But we don't oppose to a reasonable portion of the asset allocation. Thanks.
So we're going to transition, but before I do to you, Rob, I just want to point out we were talking about crypto. That we have these deep dives not only by geography, but you know, I've been on calls with some people on here. I know that many of you are swinging very large bats in this area. I happen to be a crypto skeptic, but that's what makes, you know, life a rich pageant. And we'll have a proper event on this soon. So I'll switch back to you, Rob, to lead off the panel.
Cool. Thanks, Mark. Thanks very much, everyone, for joining, and particular thanks to the members of the panel who agreed to speak and give some insights on their approach to the venture space in Asia generally. Mark, you've just got your settings screen up sharing. So delighted to be joined by Seon Kang from Green, which is focused on venture, spanning North Asia and now sort of beginning to reach in Southeast Asia. Magnus Grimmeland, the CEO and founder of Antler, which is fast becoming or has become the world's largest early stage company builder, which is taking a global approach and is now operating, I think, in 11 markets as of this week. And it's every month there's a new market announced. Paul Santos, who we heard referenced earlier from Wavemaker, a Singapore-based seed to Series B, B2B, and deep tech focused fund focused on Southeast Asia. Huiting Kuo from Altara, which is a Southeast Asia focused seed to Series C fund. And Huiting also comes with a perspective of a family office background. Talking about family offices, delighted also to have Mark Sung, who represents Gentry Fund, which is the fund backed by the SM Investments Corp from the Philippines. And last but not least, Elvin Zhang from Cinema Innovation and the StarTech Global Fund, which is one of Indonesia's largest conglomerates. So hopefully we're going to be able to give you some insights from Pan-Asia, but also Asia Global on these perspectives. So I just wanted to start there. Seong, you're sort of bringing the perspective from the US and focusing in on Asia. Where do you think the value is captured best from what you focus on, looking at Asia on the whole and how it's evolving as a venture landscape?
Great, thanks everyone. Nice to be here. In terms of where we see the greatest opportunity, I would say we're primarily focused on early stage, and even though we do have a Pan-Asia strategy, roughly 80% of that is concentrated in China. Perhaps for obvious reasons, but I think we are maybe to level set and share some data that will support kind of how we have approached it. So maybe about 30 years ago, Asia accounted only for about 3% of global VC dollars, and now it's almost 35%, and the majority of that flows to China. There are obviously a lot of trends happening there, the demographics, etc. And not dissimilar to the point that was made earlier about ESG. We do think that some of the macro factors will lead to just digital transformation generally, not just in ESG, but just more broadly, will be addressed by local or regional winners, not necessarily global or US-based or Western-based companies. And so, again, I think just as a short answer, I would say predominantly China early stage. However, we do have, again, the 20% exposure is primarily Korea, but also some exposure to India and to Southeast Asia. And we are beginning we have broken the seal on Southeast Asia recently.
Cool, thanks, Seon. So Huiting, perhaps I can bring you in here and ask, you're a child of Southeast Asia who's been educated in the US, but a returnee, and we were speaking earlier this week about how that's symptomatic of perhaps one of the trends that's driving one of the structural opportunities in venture in Asia. Do you want to give us some insight into, within your focus, predominantly Southeast Asia focus, but with a bit of global agnostic, opportunistic investing, where do you see the biggest structural opportunities in venture for Asian investors or Asian focused investors?
Yeah, thanks, Rob. I think I heard your question correctly. Everyone's kind of cutting in and out for me, so forgive me if I'm getting the question wrong. But I think for us, what we're seeing, you're right, what we're seeing, which is an interesting opportunity. A lot of these foreign educated or Western educated, locals are now coming back to Southeast Asia. I think a lot of that has to do with what's happening in the US and in Europe in general. Which is kind of like a push factor, if you will, but also because Southeast Asia on the ground is just looking a lot more interesting. All of these people are now coming back. They've been Western educated. They're coming back with a different mindset, and they're going, what can I do differently? And so they're tackling a lot of real problems that stem from either developmental gaps or infrastructure gaps. And so that means that they're, creating or innovating or starting startups that are actually solving real problems, which for us for Altara is one of our investment criteria. We're not likely to be investing in, trend type startups. We're more likely to want to invest in something that solves a real problem, real need right now.
Cool, thank you. And Magnus, I read a really interesting interview with you earlier this week where you said that your abiding mission setting up Antler was you wanted to leave a legacy to your son and to the world of creating that positive impact, and you felt that venture was the way to go. You're an ex-consultant turned consumer entrepreneur turned venture capitalist who's chosen to build a global franchise for venture out of Asia, but now onto all the markets where it's more advanced in terms of venture. What are the different dynamics that you see across the piece, and what excites you about Asia within the global dynamic of venture?
Yeah, thanks a lot, Rob, and very, very excited to be here. And congrats on gathering some of the best minds on Asia on this call. It's great to see some great people in our network here. I think what is super interesting in Southeast Asia is, you have this 600 million people that are close to a couple of billion people markets, and have very strong ties to the US as well. That is growing incredibly fast. The economies there are kind of stably grown about 6 to 8% per year, and the amount of people who are digitalizing is probably the fastest digitalization who's happened anywhere ever in the world. And you have this history of the last few years where, I think you only go back to when I came back down here to be part of building Zalora, which is the biggest fashion e-commerce company here right now. The amount of money that went into tech companies was probably in the hundreds of millions a year, possibly even below that. And there was kind of one unicorn or so in the whole region. But in the generation of 2011, 2013, a number of really, really fast growing platforms was built in Southeast Asia that are now, $1 billion plus companies, $10 billion plus companies. And we also have the first $100 billion company kind of built in the tech industry here in less than 10 years in Southeast Asia. And the amount of money being deployed every year has gone from hundreds of millions to billions to now more than double-digit billions every year into the ecosystem, which is super exciting to see. And this, I think, is just a start, because what ends up happening, and we see that very clearly in Antler, because if you go to ecosystems, giants are built upon giants. So, for example, if you go to Stockholm, which is a micro ecosystem, you can see very clearly the amount of fantastic companies that are being built from Spotify alumni ICER alumni, Minecraft alumni, Skype alumni. In Southeast Asia, you're seeing the same thing right now. You have these giants being built in the 2011, 2013 timeframe. You know, Grab Taxi, Gojek, Lazada, Zalora, a lot of other great companies. And the second, third line of these companies have kind of left and started building their own businesses. And these companies have become big enough to start acquiring other businesses. And some are going public and liquidity is coming back into the market. So you're in this kind of funnel right now where the flywheel really started to move. You have a tremendous amount of access to talent who spent 5 to 6 years building already a successful business. You have tremendous access to capital, not only from these billion-dollar markets around us, but also from the US, from Japan, from Korea, and the people who earn money here in the ecosystem. So you have that access to capital, while you have an ecosystem of customers and businesses that are growing faster than most other places across the globe, which you know, I think to me at least leads to this view on Southeast Asia going forward, that we're really just at the very beginning of what's happening here. And I think right now we're really at the sweet spot in terms of all of these things coming together, in terms of talent, in terms of opportunities to access a big market, access to capital, and important for people who are putting money into this, because I think that's been one of the downsides of investing into Asia outside of China up until recently, access to liquidity in the private markets. So yeah, very, very excited about the future.
Awesome, thanks. And Paul, you're focusing on the niche of B2B and enterprise, which Greg, you know, alluded to earlier, which when he started looking at the space, when he was CIO at Pitt, you know, it was perhaps the poorer cousin to consumer. And it's now sort of, you know, it's turned from the ugly duckling, it's becoming a beautiful swan. And we're starting, you know, we've got our first sort of soon to be listed $1 billion unicorn in the space, Trax in Singapore. What excites you about the space? And, you know, we've heard a lot about the transfer of talent and the transfer of technology from the US, from China into Southeast Asia. But what do you think, as we think about that period of evolution where, you know, giants growing upon giant shoulders that Magnus just alluded to, what does Southeast Asia, what does Asia major have to teach the rest of the world in the next decade and the next 20 years? You're on mute.
Somebody muted me, sorry.
You have to buy everyone a drink.
That's
Anyway.
right. You'll learn that you owe 68 drinks now. It's okay.
Somebody muted me. so anyway,
Somebody
yeah,
wanted to drink.
happy to buy drinks.
Hey, you know, I'll minimize myself, Mark.
Fair enough.
So thanks for the question, Rob. So let me try to answer it this way. So there are many ways to look at Southeast Asia, and I'll share kind of my lens looking at it from a B2B and deep tech standpoint. So one way to think about it is to cut up Southeast Asia as Singapore and the rest of Southeast Asia. And Singapore is great for large enterprise and deep tech startups. Why? Because if you think about one of the biggest risk factors these large enterprise or deep tech focused startups need to overcome, it's winning their first marquee customer. And Singapore is very good at that. They put capital on the table. They have sort of all the corporates over here, and they try to spur innovation. And we've seen this happen often in our portfolio. And I will relate that to your talent question where, yes, you have people returning from outside, but in a place like Singapore, you have executive level talent that's also here. And they could also be really effective entrepreneurs. If you look at our portfolio, we have about 36 nationalities. I mean, if you check a China manager's portfolio, it's probably all Chinese, or an India manager's portfolio, it's probably all Indian. But we have, you know, talent from places like, you know, the US, China, Southeast Asia, the usual suspects. But we have, you know, I have 3 PhDs from Iran doing 3 different kinds of deep tech startups, right? And so the talent that we have here, I'll give you some examples of startups that have been, I guess, developed from Singapore and competing with the world, across the world. We have a company called Silent 8 that's using AI to do anti-money laundering resolution for banks. It was a Polish founder who moved here and kept his dev team in Poland and wanted to be headquartered in Singapore because he thought the customers would be here, the competition would be weaker, and he felt that the government support would help him get his break, and it worked. They now do anti-money laundering resolutions for banks like HSBC and Standard Chartered globally. We have a company called Novade that does construction site management software. The founder was French, but he used to head up Autodesk for Asia Pacific. It was $1 billion portfolio that he managed. He built this company from scratch. We won a deal, a 3-year, $3 million contract in Europe, competing against a startup that was based in Europe that had raised 20 times the capital we raised, and we still won, right? And then I guess the last example would be a company like Borneo, where we're doing this hot space called data privacy, competing against Silicon Valley startups that are better funded. And the guy behind it used to be head of global data security of Yahoo, of Facebook, and then Uber, and chose to set up his business here. So there's talent here that you don't expect that can go global. So that's Singapore. For the rest of Southeast Asia, the markets are different enough, and there's enough local talent that understand local problems that you can come up with businesses that might not look like businesses you've seen abroad. Very often in tech, you'll say, I'll try to do the Southeast Asia version of this US startup or China startup or India startup, which is a way to win. And that often happens in the consumer space. But in the SME sector, we find that there are things that are not as obvious to people that you can find real value in. So we have a company in Indonesia called eFishery. The founder is a fish farmer engineer from Bandung. And he started with an automated fish feeder. Why? Because that's the #1 cost of fish farmers. And it's grown into a digital fishing cooperative. And in a couple of years, they're doing north of $50 million in GMV, and they've been profitable. We have companies that are doing B2B marketplaces like Gudang Ada, also in Indonesia, that grew to north of $5 billion in GMV with only $20 million of investment. You've never seen that. The other marketplaces that got to that level had to spend hundreds of millions, if not billions. And then we have a company like Grocery, which recently raised $30 million from guys like Temasek, Tencent, IFC, that's doing a similar thing, but in a different way. And they're the first ones in the region to show positive contribution margins. I guess the point I'm making here is in both instances, there are opportunities here that people don't expect. And that's why they're priced competitively. And we think early stage VC is a great place to start. You come in low and then you show the value and hopefully get rewarded. And so, there's a lot to learn from Southeast Asia because there's talent here, there's opportunity here, and it doesn't have to look like anything you've seen elsewhere. So hopefully Southeast Asia contributes more to the world's innovation.
Thanks a lot. Yeah, one of my favorite quotes, and I can't remember who to attribute it to, having spent the last sort of 10 years working in and around family businesses and the venture space, is that today's entrepreneurs are the leaders of tomorrow's family businesses, because they will turn into, multi-generational wealth owners if they get it right. Mark, you're working for the single largest sort of family conglomerate out of the Philippines. We haven't really touched the Philippines, but I've got a dual question here. Perhaps you could just give us some insight into some of the structural opportunities coming out of the Philippines. And the second one is, how does a family business start to approach venture, and what do you think the opportunities are for family businesses in the space?
Sure. Thanks, Rob. Thanks for the question. Thanks for inviting me as well. I guess the way we structure Giant Tree Fund was quite unique in the sense that we are not really a corporate VC fund. We are more a financial VC. So we sit at the family office level. We don't sit on the balance sheet of SM Group, which is the family's main conglomerate business that they're involved in. I guess the way we kind of conceptualized it, I think we quite early on quickly realized that the priorities of founders it's going to be quite different from SM, right? I mean, the way the founders want to do things is going to be quite different, and sort of having control from the conglomerate in the startup in too big a way can actually kill their sort of prospects. It does kill their growth opportunities as well. So the way we wanted to do it was a very arm's length approach. We wanted to be financial investors because ultimately the goal of the family in venture is not so much strategic, it's more a financial return. And I guess it gels very well with sort of the founders' mindset, the founders that we approach. It gels very well with their sort of mindset towards the business as well, because we don't take control, we keep them independent. What we do is really provide shareholder support by giving them revenue opportunities with SM. We don't give them preferential terms, but we give them priority access. So I think that's a key differentiator here. And I guess that differs a little bit CVC to CVC. But for us, I guess the ultimate goal for us is a financial return. And I guess that kind of gels into the way that we have set up the fund. So it's under the family office side of things, we're not on the balance sheet. In terms of the level of support we give, naturally, my principals in the fund are C family members who are operational within the so in that sense, they are able to also provide direct feedback from an operational point of view with it for working in the Philippines for companies that are operational there. Sorry, the first part of the question, Rob, I think you're cutting out a little bit initially.
What are some of the structural opportunities that you think the Philippines has, over other parts of Southeast Asia? Because we haven't really touched on that market.
Sure. So I think Paul is also really experienced in the Philippines naturally. But yeah, I think what I see about the Philippines is it's quite different as a market from Indonesia, right? It's quite different as a market from Thailand and the rest of the countries as well. I think what we have in the Philippines are more vertically focused conglomerates. So conglomerates that are focused on, for example, the SM side of things is very consumer. They're one of the biggest mall operators in the country. They own 2 banks. They have the property development arm, but the common theme there is consumer, right? So it's very B2C, direct consumer. With some of the other conglomerates, I guess it's quite different. I guess, the Ayala side of things, they're a bit more on the infra utility side of it. Arboitus are more energy mining and whatnot. So you have that sort of vertical focused conglomerates in the Philippines. And I guess that's where the Philippines can get a little bit close in a sense. What we found the most helpful is investing alongside the guys at Kickstart, investing alongside the guys at JG Dev. We find them as very supportive partners, actually, when we are all able to get into the same cap table, when we are all able to sit in the same board. Naturally, one founders who are able to manage that sort of dynamic, right? And I think that goes to the strength of the founding team and the management team as well. But we find that companies who are able to have that sort of multi-family support, you really unlock the market for yourself because, people like Kickstart, for example, can give you certain value from the Globe Telco side of things. They can white label your app for free data access. For the SM side of things, we can support in terms of fulfillment in provincial areas. We have the ability to do channel partnerships with them to work with some of our tenants as well. So I think where we are seeing the real opportunity, at least within the Gentry House view, is being able to be friends with everyone in the market and do things with them. Because I think the ultimate goal when you have that sort of multivariate support is to exit to the market with the founder. So whether or not it's a trade sale or IPO, I think that's what we're gunning for as a fund mandate.
Awesome, thank you. And Elvin, last but not least, thanks for your patience. You're representing one of the largest, if not the single largest, it's always hard to know, Indonesian family conglomerates, but with a mandate that sort of really extends to that technology transfer piece and capturing value out of China's venture ecosystem and seeing how you can bring value across to Indonesia, which, for those folks who are on this call who may not be so familiar with, with Asia, it is just such a fascinating market. 270 odd million people, 1,700 islands in the archipelagos, huge structural challenges. So what are some of the learnings that you've got of trying to do that technology transfer piece, and what are some of the opportunities you see for China's interaction with Indonesia and wider Southeast Asia?
I think, hi, thanks for the invite. Thanks for the question as well. I think it's very interesting to hear from the start, right? That people actually looked at China as a backbone first, because I think it's like the deer and the dragon. You can't really run away from China's shadow in Southeast Asia operating. I think one of the key technology transfers that we've seen so far is infrastructure. That's you see like China has created AIIB, even just to so-called fight with the IFC to find infrastructure developments in Southeast Asia. So Indonesia is a big beneficiary. I think Cinemas Group, in fact, I'll say most of our developments either done by the Japanese or but done by the Chinese, and more we see like the Chinese companies, like one of them is called Sunyi, which is like kind of like a caterpillar of sorts, which is a Komatsu of sorts that we use. We started to use their machineries and their equipments in a very significant way. So I think it usually used to be known as cheap, but like cheap technology, when it scales up to a certain level and they started to improve on their core R&D capabilities in China, then that spills over to Indonesia. So because I myself, Cinemas Group is quite decentralized, so I don't represent an entire group. I represent the financial services and the energy and infrastructure side. So for infrastructure side, energy, when we do open up, like say open pit mine for thermal coal or nickel mines, which is probably one of the, I think, echoing one of your points earlier, one of the structural advantage of Indonesia as a country, because Indonesia has 26%, close to 30% of the entire world's nickel reserves. And we all know where, with the carbon credits and all this lithium ion battery gonna be the whole green thing moving forward, and everyone moving forward to become like to become a massive adopter of electric vehicles. So that is something that we see as China can add a lot of value. I think, in fact, one of the bills that just very recently, one of the unicorns in China that we were trying to do a strategic investment in, still closing around, so can't really share right here, is in the electric vehicle space, autonomous vehicle space, but it's basically a chipset company, right? AI chip for electric vehicle and autonomous vehicles. So that itself, they're also exploring to use Singapore, as mentioned by one of the panelists just now, as a stepping board. So it's gonna be like this, I mean, call it PR or whatever, like use Singapore as a stepping board, R&D moving over from China to Singapore, and then after that actually landing in Indonesia to service the Indonesian market. So I think that's something that is really interesting, and I think that is kind of a joint venture. That's kind of investment mandate that I personally look out for. So a little bit later stage, Series B, Series C, and above in China, coming to Southeast Asia. It might be M&As, it might be just building up from scratch. So that depends on, I think, the dynamics of the vertical and the market itself.
Cool, thanks. I want to talk a little bit more about that sort of stage conundrum or question. Magnus, you're building a business that is focused on the very earliest stage, but you've recently also launched a global fund for to enable you to sort of capture value or retain value from businesses you're building, but also, this call is kind of symptomatic of the way that ecosystems work within venture, and people talk and people exchange ideas and opportunities, and you're looking to capture some of that. But one of the other things that is so interesting about the venture space is the way that it pivots and ducks and dives with the way that the world's moving. And we've had for the last 18 months, perhaps the biggest crisis that most of us have ever lived through, or we will ever live through, in terms of COVID. And I've heard from the Antler portfolio some interesting innovations, like a company like Breathonics that developed in a very short space of time a breath activated COVID test. What do you think the learnings in 5 years' time, when the dust settles on COVID, will be for the venture ecosystem, on how companies are built, should be built, will be built for the next decade?
Yeah, so I think great question. So I think one of the major learnings is kind of something that we kind of knew from before, but it's become even more evident, and that is that if you have an incredible founder team and incredible founders, they will adapt really to take advantage of any kind of new situation, or find a way to survive kind of hard temporary challenges. Like, we had companies in our portfolio that their revenue pre-COVID was suddenly reduced in a month's time with 97%. But they still managed to get, Sequoia to lead their subsequent round, and they managed to get into new kind of industries, get new revenue, and come out of it now, and they're ready to kind of pounce on what they did before, really incredibly well. Then you have other stories like the one you mentioned, Breathonics, right, where this was a team that was doing lung cancer research. So they were doing research on how you can detect lung cancer through doing tests of the breath. And they thought, okay, hey, we kind of know how to detect this disease. Suddenly there's a new disease which is turning the world upside down, and we can use the same technology to make a huge impact, positive impact on the world by deploying this technology to solving this new problem. And because they were a team that had the ability to pivot, the ability to see that opportunity and execute on it, they now have launched the first 60-second breath test, which is live at Changi Airport, I think Dubai, I think they're also launching in Malaysia and rolling it across the globe. And this is obviously a great solution as people are joining stadiums for the European Championship or the Olympics coming in Japan. You can't discover with 100% accuracy whether you have COVID, but with a 90% plus accuracy, and ensure that if you have a positive case, you don't enter into that stadium and give your disease to a bunch of other people, but you go home, right? I think that is really what I think we've seen very clearly, is that where we had exceptional founders, they found a way to adapt or take advantage of these new opportunities, where you saw decades worth of change happening in some industries in a very short period of time. So it just kind of reinforces the importance of backing incredible teams, because, I think what really happened is that, pre-COVID, and, I guess in really great times, average teams will kind of succeed for a long time. It takes a longer time to kind of die. But then when the world suddenly changes, the great teams will proceed and solve those problems and do incredibly well. And I think that's the kind of major learning that we've seen. And obviously, even if this has obviously been terrible for the world and really bad experience, I think we operate in this space, who are lucky to support exceptional people who are solving these important problems, are doing the right thing, because I do believe, as you opened with, Rob, that the world's largest problems will be solved by exceptional people innovating around them, which Paul also talked about in terms of how some of these teams now in Southeast Asia are really innovating for the world.
And Paul, I want to bring you back in here. I mean, I read today, I'm going to forget the name of the company, but there's a company in Israel in the cyberspace that just announced a $543 million Series A, which just blew me away. It's been bootstrapped by two guys who had a pretty successful $1 billion exit previously, but what are the big problems that B2B and enterprise are going to solve in the next 5 years, do you think, coming out of Asia? Because we've seen some extraordinary successes in the last year and a half, with the likes of Snowflake being one of the most successful post-IPO stories, and IPO stories, and other sort of enterprise SaaS companies. Do you think there are big problems that are going to be solved by B2B and enterprise SaaS in Asia? He's done it again.
With Paul.
Somebody muted me again. Sorry. Yeah, that's the plan. That's the bet, right? That's why we're investing. Maybe I'll just go back to some of the companies I shared with you earlier, and I guess the point I want to make is we're already doing it. And if you again take that company Silent 8, maybe I tell the story a little more. We invested in that in 2016. We were attempting to do AI out of Singapore in 2016. How many people are crazy enough to do that? And a lot of the VCs saw it, and it's kind of crazy. But these guys had something about them. They had built companies in Poland, and they decided to come to Singapore. And what their version of AI was try to use AI to do search for documents inside enterprises, right? And you'd think, okay, that's kind of like cheaper, better, faster Watson was the initial thought. I mean, IBM Watson was just coming out at that time. But because they were in Singapore, they were talking to different corporates, and they stumbled upon the innovation office of StanChart. And the guy at StanChart asked them, have you ever thought of applying your technology for anti-money laundering? And he said, no. And he said, you should. And he took that advice. And because he's in Singapore, he gets to talk to 30 banking executives in 3 weeks and finds out that, yes, anti-money laundering is a big problem. I don't know if you guys are aware of the fines that these banks pay. Like, I think the highest fine was BNP Paribas with like 9 billion. And down to hundreds of millions, right? And how it's done is basically you have a lot of these transactions. There's software that kind of scores it, but you need humans to search through databases and put documentary evidence that says something like Paul didn't commit the murder in Singapore because he is in Hong Kong at that time, right? You can imagine how wide these things can get through. And so what they basically agreed to do was let Silent 8 sit in front of the agent, give it access to all of the databases that the agents have access to. It will draft the report. And basically, the agents get to say, okay, correct, wrong, try again. And over an 18-month period, we got to 80%, and today we're at 99 plus percent. But what's interesting is that company got that break in Singapore and won a multi-year, multi-million-dollar contract with less than $2 million invested in it. You couldn't have built this company in Silicon Valley. And after that, StanChart liked it so much, StanChart Ventures invested. And then we've grown. And then again, the recent win that was announced, or the win that was announced earlier this year, was HSBC, I guess the largest bank in the Western world. And they were the second largest fine paid. So I guess what I'm saying, Rob, is there are problems everywhere. And we don't have to pick one. We just, to Magnus's point, we just have to find the entrepreneurs who are solving them. And, if we back them, again, Singapore is a great launch pad, because when you get the chance to pitch to 90% of the Fortune 500 because they have offices here, and you get that 0 to 1 moment of getting your first reference customer, you have a real shot at serving the world. Again, I could go on the same, but it's the same path that Novade went through. It's the same path that Borneo is going through, and several of our other portfolio companies.
Thanks, Paul. And so, on bringing you back in, one of the things that, from a US resident investor's perspective, maybe most you may be most aware of, if you weren't a professional in the venture world, would be the headlines around suddenly Southeast Asian companies going public on, US exchanges, emerging with SPACs. And then if you look at the sort of IPO market and the late stage market, had some fairly huge successes, but it's also had some troubled times with the regulatory environment and the cancellation of the tabled and IPO. What do you think has to happen to make dollars flow as readily into companies and turn them into unicorns in Asia? And I'm talking about sort of Southeast Asia and wider Asia, as it does in Silicon Valley, because Paul just talked about a dynamic where you can achieve a lot more with a lot less dollars in Asia in some circumstances, but you seem to still get quite a lot of dollars still focused around Sand Hill Road and lots of mega funds there. And yet, we've only had 2 stories of Asian unicorns getting to go public, one now with Grab having sort of aborted its attempt to go public with Altimeter. But what do you think's got to change, and what excites you most about the next decade for someone who's got exposure through a fund-to-fund mandate to the Asian VC ecosystem?
So if we're talking about not just Southeast Asia, but broader Asia, there have been some other IPOs like Coupang out of Korea. I think 75 billion market cap now. I think everyone knows about Sea in Southeast Asia, and then clearly there are a lot of China IPOs. In the US, since the year 2000, almost 90% of the exits have actually been through M&A. So, the IPOs and now SPACs and direct listings make more headlines. The data actually suggests a lot of the exits are through M&A. So I guess it's a TBD kind of how that manifests itself and plays out in the US. But in our opinion, again, it doesn't have to just be through an IPO. We have, seen Flipkart sell to Walmart, and in Korea, again, we have seen, Toss just raised, that just hit the tape last night, big challenger bank in Korea at almost a $7.5 billion valuation. And the Grubhub of Korea sold to Delivery Hero, and the investors got Delivery Hero publicly traded stock. So I think that there are enough data points that we do think that there will be those exits, and we feel like we're starting to see them in some of these geos to give us, India took a long time. I think the challenge that Western LPs had with the India market, even though on paper everything looked great, is a democracy and a big population and a unified language. It took forever to start getting exits, and you're actually seeing that happen more quickly in some of these other geos. And then just in terms of what makes us excited, what we think will accelerate, I guess, the flow of capital from, that you're seeing some of that happen already with some of these crossover funds, are a lot of the same trends that we can relate to in the West that are drivers in Asia. So, domestic consumption, kind of what one of our managers calls silver China, which is getting the 55 and over set to become more tech savvy. The actually interesting thing that you're starting to see is more domestic brands emerging and gaining acceptance in Asia versus imported brands. So it's not just the import of Western goods that you buy or shop for as a kind of a status symbol. Now there's more domestic brands emerging. And then just one thing that we don't necessarily see in the West, just the beginning of China's, I think it's their 14th five-year plan, being very focused on science and deep tech and sustainability. And so we're pretty interested in that, all of these trends and themes. And I guess I just conclude on the point that, and I mentioned earlier, how about 35% of global venture dollars are going to Asia. And so maybe kind of simplistic, but if you don't have that level of exposure in your portfolio to Asia, then you are, the saying, no decision is a decision, then you're effectively shorting the market of Asia and in your portfolio, which is just not a bet that we would make. And so, we're becoming increasingly active in the region. We've been active in the region for about 15 years, but, as I mentioned, making Southeast Asia investments for the first time, et cetera. So we're pretty excited about the opportunity.
Rob, do you mind if I just ask a follow-up here?
Yeah, please do.
You said 35%. So where are you allocating? If you think globally, I know innovation, the US, Israel, China always come to mind. Whose loot is Europe just not getting the piece of the cheese, or what? How do you look at the global landscape?
So we invest in Asia is a primary international exposure for our platform. And again, 80% of that's China, 20% Korea, India, Southeast Asia. The remainder of that is Israel. And then Europe is starting to increase. For quite a while, I think maybe across all asset classes, I think there was a view that there's a kind of a value arb that could be had between Europe and other developed markets, which I think for a very long time was not correct. But in the last several years, not dissimilar to what we just talked about with Asia, with the iZettle and Adyen and Spotify and some of these exits in Europe, as well as other trends that you're seeing globally with the just the proliferation of ubiquitous computing, et cetera, and the institutionalization of the seed class, we're seeing a lot more activity in Western Europe. And so we are starting to get a little bit more active there also.
Cool. I'm super conscious that I was told to end this panel by 9:15, and I haven't been fair to all of the panelists to give them the right opportunity to speak. We could go on for hours and hours with such an eminent panel. I'm going to ask one final question to Hui Ting, and then look, I'd love to give the opportunity to Elvin and Mark to talk more in the breakouts. And when we go into the breakouts, it really is an opportunity for everyone to sort of, first of all, table who they are, what they do, what their focus is in 20 seconds, but also then it's just an open discussion. What do you want to hear? What do you want to see? My final question is going to be to you, Hui Ting, sort of the reverse, okay? You're in Asia, been educated outside Asia, you come back to Asia in a fund that has within its core mandate creating impact for people's lives. And I'll look at one example, actually an antler company that you guys invested in and led around, Sampingyam, which is all about creating opportunity for blue collar workers to get better access to jobs, right? Taking that, but also taking what Seon's saying, and for all the other LP representatives on this, what do you want to see as a member of the venture ecosystem being asked? What are the questions you want to see being asked of LPs to get them to better understand what the opportunity is in Asia?
What do I want? I'm trying to, sorry, because you cut out.
You're also sounding a bit like Ghostbusters. Yeah, like what are the key questions? What are the key questions that you want to see the global LP community like being asked, or the questions being framed to them to better showcase Asia as a destination to ensure that that 35% truly does flow to funds like yours and your friends and partners on this call?
What are some of the key questions I want to hear the LPs asking funds? Is that the question?
Yep.
I mean, I think that it should be about why Southeast Asia? Like, why should we invest in Southeast Asia? What is Southeast Asia? Why is Southeast Asia different than investing in the US or in Europe? And ideally, as a fund, what I would really like to see from LPs coming to talk to us are LPs who already acknowledge that you can't just copy and paste what's worked in the US or what's worked in China and expect that to work in Southeast Asia, because Southeast Asia is completely different. I mean, we're not a homogenous landmass. I know people tend to think of Southeast Asia as one region, but we're really so many different countries, so many different languages, that, I think it's interesting. It's interesting that all of these new founders coming back into Southeast Asia. You've got foreign, let's say corporate executives who, have years of experience in what they're doing, coming into Southeast Asia, trying to find the problem that they want to solve, basically within their expertise. And they're able to find that because, there's just so much opportunity in Southeast Asia. There's so much knowledge that people can take from the West to bring to Southeast Asia that basically can essentially allow Southeast Asia to leapfrog a lot of the traditional kind of progress milestones, if you will. And that's what's interesting. And so for me, it's interesting. What I would like is for LPs to acknowledge that, Southeast Asia is completely different from the US and Europe, and they don't expect a copy and paste version of what's worked in the West to work in Southeast Asia.
Thanks, Hui Ting. Okay, so we're gonna break to the breakout rooms in 1 minute. I just want to ask Sherry Witter, representing her US family office, for a perspective from a US family office LP. What's your opinion of the views you've heard just now? What are you seeing, and what would you like to hear more from Asian fund participants to better learn from events like this, or just generally from the ecosystem? That's assuming that Sherry's still there.
Yeah, I told her 9-ish, but she may have stepped off.
Okay. Well, look, let's go to the breakout room. So you've got 3 options on the breakout rooms. Breakout room A is if you're most interested in learning more or diving in and discussing with people who are similarly interested in public markets, mature, like pre-IPO, post-IPO, private equity, real estate type stuff up in Pan Asia. Breakout B, if you would like to learn more about Korea, China, North Asian VC, Japan, if anyone's got a focus on that. And I think, Elvin, if you can sort of dive in there and sort of help steer that and lead that a little bit, if people want to learn a bit more about that, as well as give your Indonesia perspective. And then breakout C, which is the Southeast Asian perspective. You know, we've had Magnus very kindly give us his time this evening. We've also got Jussi Savolara, who's a co-founder at Antler and leads their Southeast Asian business unit here. So Jussi is going to be in there. He'll give, you know, a perspective on his view of Southeast Asia, having been here for a while, and Huiting will be in there. And then, you know, please use the time in the rooms to pipe up, tell people who you are if you don't know each other, and ask questions and have an open discussion. And then we'll come back in here in about 25 to 27 minutes time. And I just like someone to stick their hand up and say, look, in our room, we discussed the good, the bad, the ugly. This was great. This was what people thought. This is what we'd like to see change. And then Mark will begin to wrap things up. But I want to thank Magnus, Paul, Seon, Huiting, Mark Sung, and Elvin for giving their time today and their views. And hopefully we can do this all again in September or something, and dive into Asia again once the summer's over and hear about the next unicorn that's been launched.